Good evening, everyone. Welcome to our Get Ready for Tax Season 2025 webinar. I am absolutely so excited to see so many of you stream into the room. So welcome. And before we get started, you will see that you've got access to the chats. Please make use of that. Let me start by asking, how many of you would like an easy breezy, stress-less or stress-free rather 2025 tax season? Absolutely. You can just put in the chat, yes, me. And then the second question is, how many of you would like amazing, easy to complete templates to help you prepare for the 2025 tax season? Put in the chat if you're ready for some easy to complete templates, which is going to help you. Thank you. I see so many of you connecting with us in the chat. I would like to take this opportunity to thank you for joining us this evening. It is so wonderful to see so many of our clients, familiar faces, and then some new attendees as well. We are super excited to spend the next 30 minutes with you, preparing you for the 2025 tax season. Before we jump in, I want to just take this time to introduce the team. For those of you that don't know me, I'm Claire, the Director and Professional Accountant at FJM Accounting and Tax. And the team at FJM Accounting and Tax Advisors is really your business and tax cheerleaders. Our speaker this evening is Sumire. She's a professional accountant at SAIPA and is very passionate about bridging the gap between the taxpayer and compliance such as SARS. And she does that through educational content such as this webinar. So please ensure that you are following us on social media to keep your eyes open for future webinars. And in the back end, we've got Clarissa van Heerden. She is a tax technician at site, and she's the one that's going to be keeping her eye on that chat for any questions that you have during the session. I really want to encourage you to take advantage, ask questions. We'll be attending to all those questions at the end of the session. And then during the webinar, we are going to be speaking a lot about downloads and these nice, easy to complete templates. That will all be available at the end of the session. So please stay tuned. For now, I'm going to hand over to Sumire. I hope you've got a notebook ready and enjoy the session.
Thank you so much, Claire, and good evening, everyone. It is really great to have you all here tonight. I'm going to go ahead and switch off my camera just to save some bandwidth during the session, but you'll definitely still be able to hear my voice. Okay, so if I just go ahead on the presentation, I want to open up with a quote by Benjamin Franklin that says, "By failing to prepare, we are preparing to fail." And I think it captures the heart and the essence of tax season so beautifully. I think tax season can be such an overwhelming and stressful season. But the truth is that with the right preparation, it doesn't have to be. In this session, I'm going to walk you through exactly what you need to know and what you need to do to prepare for a stress-free tax season. And your tax season roadmap starts here. So just to run through some of the content that we'll cover tonight, we'll start off with an overview on income tax, as well as some important dates and deadlines for the 2025 income tax filing season. Then we'll go over some must-have documents and information that you should get ready for tax season. And then we'll also look at some scenarios that you might encounter during tax season, which includes refunds, penalties and payment, maybe reviews and disputes, and so on. And then finally, I think the section we're all very excited for is we're going to go through some practical tips and tricks on how we can go about saving tax and how we can plan for future tax filing seasons to make sure that we are paying the right amount of tax, but also not overpaying any tax. So what is income tax? So income tax is the normal tax that's paid on your taxable income. Normal tax meaning it's calculated on the marginal tax rate, or maybe more commonly referred to as the tax bracket or the income tax tables that we get every year during the budget speech. So the starting point for calculating taxable income is to go and determine your gross income. So gross income is defined in the Tax Act as the total amount, in cash or otherwise, received by or accrued to a resident of South Africa during the year of assessment, and then excluding any receipts and accruals of a capital nature. So just to go through what these big fancy words actually mean is the total amount just means that it is something that is measurable. It's something that's got a value. and then it has a monetary value, so meaning in cash or otherwise. So it can be any other consideration that you receive. Maybe a property or the use of a company vehicle would be considered as an otherwise. And then it's received by or accrued to. In the Tax Act, we are required to declare those amounts by the earlier date between received or accrued. So even if amount has just accrued to you in this current year of assessment, but you've maybe only received it 2 or 3 months after the year of assessment, you'd still be required to declare that amount as part of your taxable income in this current year of assessment because it's been accrued to you. And then, of course, you're a resident of South Africa. It's during the current year of assessment. So we're heading towards month end now. So we're all hoping for some interest on our positive bank balances. But that amount that you'd be receiving this month actually forms part of the 2026 year of assessment. So that wouldn't be included in the tax we're going to be submitting to SARS very, very soon. So just making sure that the amounts we include in taxable income forms part of the current year of assessment that we are dealing with, and then excluding any receipts or accruals of capital nature. And just to clarify there, these amounts are still included in your tax return, but they don't form part of the definition of gross income, just because we've got some special exclusions and inclusions when we work with anything of a capital nature. But just to mention there that it does still form part of your tax return. And then why tax season matters. Why do we pay tax? I think it's a question that everybody has on their mind this time of year. And tax season is not just the compliance box that we tick every once a year. It's actually part of your financial well-being and your financial responsibility as a citizen of South Africa. So, of course, it's part of the law. So as qualifying citizens or qualifying individuals in South Africa, we are required by law to pay tax and to make a tax submission every year. And you might actually be owed a refund. So during the year, you pay as you earn on your salary, of course, but you also accumulate things like contributions to your retirement annuity. Maybe you've had some out-of-pocket medical expenses, and those all give way to a possible tax refund. So not submitting your tax, you could actually be losing out on a very nice refund. And then, of course, it avoids any admin penalties or admin blocks. So not submitting your tax, SARS can actually deny you a tax clearance certificate. And tax clearance certificate is actually a very important document. You'll see that if you apply for a job, you might be required to submit a tax clearance certificate, or maybe if you in your personal capacity have a trade and you want to kind of open an account with a supplier, you might be required to submit that tax clearance certificate. So that's a really important document to have. It gives way to credibility, and that also gives you visibility of your finances. I think we're all guilty of not always having a look what's happening in our own personal finances. So tax season is the perfect time to just sit down, go through all your income, go through all your expenses, maybe even draw up a bit of a budget. So it's really a great way that kind of forces us to just have a bit of a look at our own finances. And then SARS is getting smarter. SARS have been working with third parties, which we'll go through a bit later, but they know what's going on in your finances, and it's really important to submit it to once again remain compliant and remain on the right side of the law. So who needs to file income tax return is always also a question we get a lot this time of year. So you are liable to pay income tax if you fall within the tax threshold. So you'll see at the end of the session in the tax box, in the chat box, we'll pop a tax guide for you. And the tax guide is just a summary of all the figures tax related. So these numbers that I've got on screen right now, you'll be able to find them in your tax guide as well. So if you ever want to refer back to that, just make sure you download your tax guide at the end of the session. But if you are 65 years or younger, you'll be required to file tax if you have a taxable income of 95,750 Rand. For people aged 65 to 74 years of age, it will be 148,217 Rand. And for persons 75 years or older, it will be 165,689 Rand. These figures are always a big challenge to pronounce this time of night, but like I said, just go ahead to your tax guide to refer back to them at a later stage. Okay, so those are your tax threshold, but there are some other requirements or some other things that might give way to you needing to file a tax return. And one of the most common ones are having multiple income streams. So you have a salary, which you get every month, but you might have a side hustle or a trade, maybe as a hairdresser over weekends, or maybe you rent out a second dwelling on your property that bring you multiple income streams, and they would then require you to file a tax return as well. And then if you are a provisional taxpayer, so that is also, again, if you've got multiple income streams or you earn very high amounts of interest, you will be a provisional taxpayer, and that automatically requires you then to file an income tax return as well. You earn any income from abroad, you receive a travel allowance or use a company car, because we know those equal deductions, or you want to claim any other deductions such as out-of-pocket medical expenses, you contribute to a retirement annuity, or perhaps you still work from home and you want to utilize a home office allowance. And then if you are required by the commissioner to file a tax return, which SARS will inform you if you are required to file a tax return, but it's always good practice to still register your profile and use that as a good indicator of whether you are required to file or not. And then on the SARS website, they also have a little questionnaire that you can complete that also tells you whether you are required to file or not. So if you're ever unsure, you can always just head to the SARS website and fill out the questionnaire, and it will give you also a very good indication whether you are required to file the income tax return or not. And then some important dates and deadlines for the 2025 filing season. So the season covers the period from the 1st of March 2024 to the 28th of February 2025. And this is what we refer to as a year of assessment. Those 12 months is what gives us that year of assessment. So SARS will start issuing auto assessments between the 7th and the 20th of July. We'll cover a bit more on auto assessments a bit later. And then for non-provisional taxpayers, they will start filing their tax returns from the 21st of July up until the 20th of October. Any top-up payments, we do encourage them to be made in September. And then for any provisional taxpayers, they will be required to file between 21 July and 19th of January next year. And the question that might pop up right now is, how do I know if I'm a provisional taxpayer or not? And that's actually something you are able to see on your RTA 34, which is the assessment you receive from SARS once you've submitted your tax. And on that document, it will actually tell you whether you now meet the requirements for a provisional taxpayer or not. But if you're ever unsure, we will be having a provisional tax webinar a bit later this year, and are more than welcome to join that one as well, just to gauge whether you meet the definition of a provisional taxpayer or not. And then I've just compiled it all into a little timeline for us. So the tax season for individuals who are not provisional taxpayers is exactly 3 months. And for individuals who are provisional taxpayers, the season is exactly 6 months. So it's about 3 weeks shorter than what we used to. So definitely a season that's on the shorter end, which is just shows us again how important it is that we are prepared and ready to hit the ground running. But yeah, just to quickly go through this one again, auto assessments start being issued from the 7th. From the 21st of July, we can start submitting our tax. We have up until 20 October to finish our submissions. Unless we are a provisional taxpayer, then we've got up until 21 or 20 January. And then in between there, we've got provisional tax season as well, which opens from the 1st of August to the 31st of August. But that will only be applicable to provisional taxpayers. So if you're not a provisional taxpayer, you do not have to worry about the August dates. They're really just there for people who are provisional taxpayers. Okay, so then just to mention again, do not wait until the 21st of July to get your documents ready. SARS have been working very, very hard with third-party data providers like banks and fund administrators. So they get information from employers, from banks, from fund administrators regarding interest you've received, the salary you've received, RA contributions you've made, your medical aid. SARS get that information already. It's pre-populated for SARS. And so through that, they are able to issue then auto assessments, which they'll be starting with on the 7th. So if you don't have your documents ready by the 7th and you receive an auto assessment, you won't be able to verify your auto assessment right away. So we'll chat a bit more about auto assessments coming up. But yeah, just kind of to stress why it's so important to maybe use this weekend already to get your tax document ready and not to wait until the 21st of July, because you never know, you might just be an individual that's actually going to receive an auto assessment. And then just to mention again for our provisional taxpayers that the season for 2026-01 will open on the 1st of August. So why should we file early? Why do we always stress on having your documents ready, being prepared, and being ready to hit the ground running? So, like I've mentioned, it is a short season. It's about 3 weeks shorter than what we've seen in previous years. And 3 weeks doesn't sound like a lot, but it really is. It's quite a lot of time that we're losing this tax year. And then, of course, faster refunds. The quicker we are able to submit our tax or accept our auto assessment, the quicker we fall in line for our refund, the quicker it gets paid out. So SARS really try to pay refunds out as quickly as possible, but there'll always be a bottleneck. So to be ahead of the bottleneck or to be ahead of the curve, it's always good to submit early. And then to avoid the last minute rush, maybe you realize that you don't have a specific tax certificate, or maybe you forgot your slips at work and now it's the last day of tax season and you want to submit, and now you are part of the last minute rush. So if you submit early and you encounter any roadblocks or errors, there's enough time to still sort it out. Maybe your fund made a mistake, anything's possible. So filing early really, really helps mitigate those last minute rushes, and it helps to overcome those roadblocks and errors. And it gives you peace of mind. I mean, the quicker you submit your tax, the quicker you don't have to worry about tax anymore, because it's going to be in the back of your mind until you submit it. So it just gives you a bit of peace of mind as well. And it gives you time to plan should you have any amount that you need to pay. So it just gives you time to maybe loosen funds from notice day accounts, etc. And then again, it shows some financial responsibility. And then it helps your accountant and tax practitioner. I promise we'll love you very much if you send us your documents early, and then it makes it much easier for us to calculate your tax quickly and help you to get your refund quickly if it's due. Okay, so this is also always a very pressing question we get is, okay, I need to submit tax, but what actually do I need? What documents does my accountant need, or what documents do I need for a successful tax submission? So the easiest way to always think about it is every amount on your tax return, or every amount that you declare, or every amount that you deduct needs a supporting document. That's the easiest way to think about it. But if we quickly go through this slide, so for income, we always have an income tax questionnaire or checklist, which I'll go through a little example a bit later, but that tells you exactly what documents you need to download. So this might include an RP file from your employer, an RT3A certificate, which is just your interest tax certificate, which you receive from fund administrators and banks, your RT3B and RT3C certificate, again from banks and investment institutions, and then any other document that might prove your income. So maybe that side hustle or second trade that you've got, or the rental that you receive, that all needs some supporting document, and that's usually by means of a profit and loss statement. And then for any deductions or expenses, those would include your medical aid tax certificate, any slips or invoices for out-of-pocket medical expenses, retirement annuity contribution certificates, your travel logbook, and your home office expenses. And then, of course, here as well, it's always the slips, the invoices, and the proof of payments that SARS will require. And then any other documents that's good to have on hand is a statement of assets and liabilities. So it's something SARS have been requesting from taxpayers recently, is a statement of your assets and your liabilities at cost. We see it more commonly in people who have multiple streams of income, where SARS would request it, or the high net worth clients. But it's also good practice just to have a look at your own personal assets and liabilities once a year when you submit your tax. So just to be aware that that's definitely something SARS can ask for. And then it's good to keep any correspondence on hand, maybe a prior year's RTA 34, because that's going to show you exactly what you claimed and submitted last year, which gives you a good starting point for this year. So that's always good to keep on hand as well. Any income tax statement of account. And then also very, very important is to make sure your e-filing profile is up to date before the tax season actually opens. Make sure your profile is active, that you know your login details, that your personal details are up to date. And maybe something to mention here as well is often taxpayers think that when you submit your return and it asks you for your personal particulars, changing it there will actually change it with SARS. But that's not true. The details need to be updated on e-filing using the RAV01 form or by means of a telephonic appointment with SARS. So changing the details on the return once you submit it actually doesn't change the details at SARS. So I think that's maybe a common mistake that we see that happens. And then also making sure that your bank details with SARS are verified and that they're up to date, just so that when you receive a refund, we are sure that SARS have the right bank details when they want to pay that out. And then also inform your accountant or your tax administrator of any changes in your credentials or just in your day-to-day. Maybe you've moved or you purchased a second property. It's always good to inform your accountant about those things so that they can guide you on exactly what documents they'll need to submit your taxes. Okay, so just to refer back, we spoke about the trade profit and loss if you've got multiple income streams. So what exactly is there and what does SARS want to see on it? So they want to see all the income that you've received through that specific trade, as well as the allowable expenses and the profit for that year of assessment. So if you've got multiple trades, so maybe you've got a rental and you've got a hairdressing trade, SARS want to see a profit and loss separately for the hairdressing trade and for the rental. That's very, very important that they are split. So yeah, I think that's the gist of a profit and loss is just your income less expenses equals then your profit and loss, and that gets submitted on your income tax return under the local business trade or professional income section. And then supporting documents to keep with your profit and loss is any invoices that you issue to your customers or your client, proof of income, so that could be bank statements or receipts, or like your cash register roll if that's something that you use, and then receipts for any expenses that you've claimed, your home office floor plan or rental agreement if that's applicable to you, and then your logbook for any travel claims. And then something I would just like to mention here as well is you've probably noticed that one day you find a slip in the back of your purse and it's completely faded. And that's why we always recommend adopting a digital system for keeping documents and scanning slips, maybe something like OneDrive or the cloud of some sort. It just keeps documents safer for longer because we know we need to keep documents for 7 years. And keeping them digitally just prevents them from having any data loss, etc. So that's also always a good practice to adopt, is just a bit of a digital strategy. Okay, and what is qualifying out-of-pocket medical expenses? What does it mean? What can I claim? What do I need? So you may qualify for additional medical tax credits if you've paid medical expenses from your own pocket. So maybe you've got a medical aid and it's been depleted, so you've had to cover some expenses from your own pocket. And you can then claim those expenses back from SARS. So a way to always think about it is, what can I deduct from my tax is almost anything that takes pressure off of the government, because having a medical aid actually takes pressure off of the government. Having a retirement annuity takes pressure off the government. So that's always a good way to kind of think about it if you're unsure whether you can claim something back or not. But back to medical expenses, it would include things like your medical practitioners, like doctors, dentists, any prescribed medicine, so that's important. It's not over-the-counter medicine. It needs to be prescribed by a doctor, any medical devices or medical procedures. And then what documents do we need to claim this? So proof of payment is very, very important. SARS will ask you for the proof of payment, and then the receipts and invoices and bank statements. SARS used to accept bank statements as proof of payment, but they actually want the physical proof of payment as you download it from your bank at the moment. So maybe as you get in your tax pack ready for tax season, just download the proof of payment so long and just have them with your invoices and your slips ready to go. And then your prescription or referral letter for any medication or services, and then a breakdown from your medical aid showing any unreimbursed amount. So another good practice to also adopt is, even if your medical aid is depleted and you know the medical aid might not cover a prescription, is still to ask Dis-Chem, for example, to put it through the medical aid, but say that you will pay cash, because so then you're sure not to miss that amount when tax season comes around. So that's also just a nice little tip or trick to make sure that you don't miss out on any medical expenses that you're actually able to claim. Okay, And then next we've got a logbook. Now, many people are very, very daunted by the logbook, and it's actually such a simple, easy to do little form that you complete. On the next slide, I've got a little snippet of exactly how the logbook looks that we can go through. But just to mention what needs to be included in your logbook, so it's the tax year's date. That's very important. So I clearly want to see for what year this logbook is. It wants your vehicle details, so make and model of the car, year when it was manufactured, and registration number. Something else that I recommend also just putting on your logbook is actually the cost price of your vehicle when you purchase it, or the current market value as valuated by a dealership. It's also good to just add to your logbook. Then your opening odometer reading on the 1st of March 2024, so the first day of the tax season, and then the closing kilometers on the last day of the tax season. Then the total kilometers that you traveled during the year and your trip-by-trip breakdown. So you'll see on the template, if I quickly go to it, SARS actually at the bottom left give you where you put in your daily business records, your daily breakdown. It gives you a place to put in your daily opening kilometers and your daily closing kilometers. That is not necessary. It's not necessary to take an odometer reading at the beginning and the end of every trip. Just put in your total business kilometers traveled. That's the most important part. And then if we just head back to the top of the template, you'll see that there's a spot for your opening kilometers for the year and your closing kilometers for the year. So that's very, very important. And then your breakdown of your day-to-day business travel. So we all know that traveling from home to work and work to home doesn't qualify as business travel. So it needs to be maybe traveling from the office to go meet a client, or traveling from the office to Postnet to go post some document, whatever it is. That then goes in the daily business travel record. And then you can add in there your actual fuel and oil costs, just keeping record of your slips, as well as any repairs and maintenance that you might have incurred. And then maybe just another mention as well, it's not necessary on your logbook to keep track of personal or private kilometers. It's only your business travel that's kept on the logbook. And then this template will also make available in the chat after the session. It's also available on SARS's website. It's the official logbook that they make available for taxpayers to use. Okay, and then the home office deduction, SARS implemented this during COVID-19 when many people were working from home. So they gave this deduction just to bring some relief for taxpayers that were incurring all of these expenses to actually work from home. So what can you claim and who can claim it? So if you're a salaried or independent contractor, then you're able to claim home office if you work from home 50% or more of your total working hours. And then you actually need an arrangement with your employer to be able to do that. You need a formal letter or an agreement with your employer that allows you to work from home. It can't just be a laxy-daisy every Friday I work from home type of thing. It needs to be an official arrangement with your employer. And then you need a dedicated office space. So no, the kitchen counter doesn't count as a dedicated office space. It needs to be a space in your home where you've got a desk, where you've got your computer, and it actually needs to be occupied by only one person. You can't have two desks, or maybe your desk and your child's study desk. SARS will not allow that. And they actually do ask for pictures of your home office should they ever review this deduction. So just make sure those things are in place should you claim a home office deduction, because we have seen that it's very likely to give way to a review. So just make very sure that you are ready with your pictures and your letter from your employer if you want to claim home office deduction. Then there's also been some changes this year from SARS' side on what we can actually claim as a home office deduction. So we can claim a portion of our fixed cost, so it's proportion to the home office space. So we take the total square meters of your home and we proportion the expenses to the total square meters of your home office. So if your home office is small, the deduction is of course smaller. And then some of the expenses you can claim is your rent, no longer the interest on your bond. So a few years ago, you were able to claim back a portion of your interest on your bond. That's no longer allowed. You can only claim back rent. Any water, electricity, rates and taxes proportion to the size of the home office, any cleaning costs, repairs and maintenance, but only to the office space. So if you've maybe repaired your driveway, yes, it's part of your home, but it's not part of your home office. So you can't proportion your driveway as part of your home office deduction. And then any depreciation on your office equipment, and then you can no longer claim back any expenses for internet or any expenses for stationery. So that was previously allowed. Unfortunately, this year SARS no longer allow us to claim those things back. Okay, and then if we just have a look at the statement of assets and liabilities, so like we mentioned, SARS might require you to submit a statement of assets and liabilities, and generally those are for taxpayers who have multiple streams of income or maybe the high net worth client. So assets, we are required to declare assets at cost. Sometimes it will be required to declare at market value. It just depends on your individual tax profile, whether you are required to declare them at cost or at market value. But assets are things like your properties, your primary residence, your beach homes, your second homes, any land that you've got, those need to be declared. Any vehicles, cars, boats, motorbikes, anything with wheels, any investments, unit trusts, shares, bonds, REITs form part of assets. Cash and bank balances, any business interests or shareholdings, crypto assets, it's a big one. It also forms part of assets, and it's very, very important to declare that to SARS. They are becoming very, very smart with crypto assets. And then any other personal assets worth 10,000 Rand. So that could be your jewelry, some antiques, some artworks that you've got, also all form part of assets that need to be declared. And then liabilities include things like your bond balance, vehicle finance, credit card balances, personal loans and overdrafts, and other debt like SARS debts, business loans, clothing accounts, will all form part of your liabilities that get submitted on your assets and liabilities statement. And you'll see when you submit your tax return and you are required to submit an assets and liabilities statement, that section of your tax return will open up. If it's not open, you don't have to stress about submitting the statement of assets and liabilities. And then something that came up during last year as well that you all might be very familiar with is the two-pot, it's almost more than three-pot, but the two-pot withdrawal system. So on the 1st of September 2024, a new retirement system was introduced that allocated retirement savings of members between a retirement component, a savings component, and a vested component, hence me calling it three-pot. But it actually allowed you to draw some money out of your retirement system. And those were taxed at the lump sum withdrawal. And we just need to take caution that it might lead to a tax payment or a tax amount due during this current year of assessment. Maybe the fund didn't tax it properly or something like that happened because tax was withheld when these amounts were withdrew. But just to take caution that if you were part of the people that withdrew from your retirement fund, you might be having a tax payment due, or you might be more used to receiving a refund. So just to take caution of that as well. Okay, and then your pre-filing checklist. So our clients will be very familiar with this document. We call it the annual declaration. And it's a document we send out around this time of year, but we'll make it available. Shows you exactly what documents you need. So it takes the stress away of trying to figure out what you need to start preparing. This document will help you. So like I said, just keep your eye on the chat box at the end of the session. It will be there to download. And then if you miss any templates, please just pop us an email and we'll be more than happy to share them with you. So this is how this document looks. So you'll see it's got a bunch of different sections. So I've got a snippet of the investment income section, the medical aid deduction section, and the retirement fund section. And it actually asks you a bunch of different questions, and you then either respond yes or no to that question. Should you say yes to the question, in the right-hand side, there's a column which tells you exactly what document you need. So for example, if we go to question number 10, it asks, are you a main member of a medical aid? If you answer yes to that question, you would be required to have a medical aid tax certificate. Then if we go a bit further down, it says, are you or any of your dependents a person with a disability? If you answer yes, you know you need an RTR-DD form. If you answer no, you know that that form is not applicable to you. And then you move on to the next question. Did you incur any medical expenses not covered by the medical scheme? If you answer yes, you know you need a medical expense schedule. Now you're like, what is a medical expense schedule? It's just in a spreadsheet listing all your out-of-pocket medical expenses, but you can also just send through your slips. That's also perfectly fine. But putting it on a spreadsheet or a schedule just makes it a bit easier for us as accountants to work with. But yeah, that's what that means. And then maybe if we go down to question number 12, it asks, did you contribute to a retirement fund, such as a pension, a provident fund, or an RAF? If you answer yes, you know you need an RT3F certificate. So yeah, this is a very, very handy dandy document to keep with you during tax season because it really tells you exactly what you need. And more to the top of the form, it also asks you a bunch of your personal details. So putting that on the form almost reminds you as well to make sure that your e-filing profile is up to date. So this is really your tax season roadmap. And then auto assessments. So that's the hot topic of this tax season. So SARS is very committed to making fulfilling your tax obligations as seamless and as easy as possible. And they have gathered data from employers, financial institutions, medical aid, retirement funds, and so on. But it is still your responsibility as the taxpayer to make 100% sure that the information that SARS received from third parties is actually correct. Because it happens where there might be an integration error between the bank and SARS, and maybe they left out interest on your one bank account or whatever the case scenario is. It's very important that the responsibility still lays on your shoulders to make sure that your auto assessment is correct and to notify SARS of anything that they might have left out of your auto assessment. So if you've got a back room or second dwelling that you rent out, SARS don't know about that just yet. So it's your responsibility to go add that to your auto assessment. So just taking very big caution that yes, auto assessments are very, very nice and they're very helpful, but the responsibility is still with us as the taxpayers to make sure that the auto assessment is correct. It's not taking the responsibility away from us. So if you agree with your auto assessment, there is nothing further that you need to do unless there's a payment, which you will be able to see on your RTA 34 or your statement of account. You then just need to make that payment before the date is due, before the due date. There's usually about a 30-day interest-free period, but it's always just good. Just make sure on your RTA 34 exactly what that date is. Should you not agree with your auto assessment, or if it's not complete, so maybe SARS left off your hairdressing side hustle, then you can complete and file a new return. So it's not like previous years where you actually had to accept or deny the return, or you had to do a request for correction. It's not like that at all. You will just submit a new return as if the auto assessment is not there. That's the best way to think about it. So there won't be any request or reject option and no request for correction option. And then unlike previous years, you'll have up until the last day of the tax season to have a look at your auto assessment or to make any adjustments where needed. It's not like prior years where you only had 40 days to do that. So that's really nice. So they've given us more time to work through our auto assessment. But I'll just mention here as well that sort out your auto assessment before the last day of tax season. It is very, very difficult, almost impossible, 3 months after tax season to go back and actually change an auto assessment. It's easier to change a normal return, but to change your auto assessment after tax season is almost impossible. So please make sure that if you are auto assessed, that you go into your auto assessment verified, fix it where it's needed so that you know you're good to go. That's just very important to take note of as well. And then on SARS's website, they just gave us some important notes to take on about auto assessment. So they just let us know that if there's a refund or a debt that's less than 100 Rand, they're actually going to roll it over to the next financial year or the next tax season. They won't pay out that 100 Rand refund and they won't expect you to pay a 100 Rand payment. So that's quite nice. I think in prior years we were required to pay even if there was like 3 cents. But SARS are going to be nice to us this year and they're going to allow us to roll debts forward. So that's just something to take note of. And then again, just to make very, very sure that your auto assessment is complete. It's still your responsibility. I think I've stressed that enough. But you're just making sure that your auto assessment is actually correct. And I think we're going to see quite a big influx of auto assessments coming through this year, much more than previous years. So yeah, don't get a fright if you auto-assessed. It's all part of SARS's process to make tax filing a lot easier. Okay, and then if we jump into some refunds, penalties, and payments, these are some things that you might encounter during tax season, and they can sometimes be a bit confusing. So I'm just going to run through them just to try and bring some more clarity to these things that kind of form part of the income tax process. So refunds, when and how do I get paid? So refunds are typically paid into your bank account, the bank account that's with SARS that you've hopefully verified within 7 to 21 business days, permitting that there is no pending review, the return is finalized, there's no outstanding supporting documents, and your banking details are valid. If those three things are not in place, SARS won't be able to actually pay out your refund. It will hold the refund back. Verifying banking details, it is a lengthy process. There's quite a lot of documents that SARS require when they do verify your banking details. So that's why it's important to do it before the tax season. Then you know it's out of the way and you know your refund will be paid out seamlessly. And then you'll receive an RTA 34 or statement of account confirming your refund or your payment due date. And then just the tip again to make sure that your banking details are up to date. And then on e-filing, where you've submitted your return, if you open up the return, there's actually an option to request your refund status. And it will tell you that your refund is being paid out in X amount of days, or your refund is being processed, or your refund is on hold. So that's also just a nice little functionality on e-filing that's available to you should you want to query your refund status. And then, of course, you can always just give SARS call center a call as well. I always recommend Thursday mornings at 8 o'clock is the best time to give SARS a call. The queues are then not as long, and you're able to query your refund status that way as well. And then any delayed refunds, what causes them? So if you've been selected for a verification audit, if you've been previously flagged as risky, banking details aren't up to date or not valid, you've been selected for a verification. Verifications take 21 business days to be verified once you've submitted your documents. So if you take 21 days to submit your documents and SARS take 21 days to review them, you can see that it becomes quite a lengthy process. So having your documents ready and submitting them the moment SARS asks for them makes that period that you have to wait for your refund so much shorter. And then sometimes there are backlogs at SARS, especially towards the end of tax season. SARS take a bit longer to process refunds, closer to the 21 days as opposed to the 7 days. And then penalties for late or non-filing. So SARS issue what they call administrative penalties if your tax has not been submitted. And these range anywhere from 250 Rand a month. I've seen go up until 2,000 Rand a month for returns that have not been submitted. And it is very, very, very difficult to request a remission on admin penalties. So if you do your tax submission, just go scan through, make sure you've submitted all the prior years. Just check that they're all there. But yeah, this is very good, almost motivation to make sure that you submit your returns on time and that you don't make your payments late. SARS are very strict with penalties and interest, and there's not much wiggle room to get them remitted. And they do accumulate quite quickly. If you've got interest on late payment, you've got underestimation penalties, and you've got administrative penalties, they do tend to accumulate very, very quickly. And then what if you owe SARS money? So your notice of assessment, your RTA 34, will show you exactly how much you owe and when it is due. So SARS give you what they call an interest-free period to make your payments. It's usually about 30 days from the day which your return was submitted, but just make sure on your RTA 34 exactly what that due date is. And then you can pay via e-filing or by an EFT using the unique payment reference number provided by SARS or at a SARS branch. And then just very, very important is to make sure your reference number is correct. It's a very lengthy number. So rather triple check it before you make your payment, because it's very, very difficult to prove to SARS that you've made your payment, but you've used the wrong reference number and not laying on someone else's statement of account. So reference numbers when paying SARS are very, very, very important. You can actually copy and paste them off of your RTA 34, so that mitigates any errors. And then something we've seen happen as well is where you load SARS on your bank as a beneficiary and you just go ahead and pay them. and then forget to update the reference number from what it was last year. So just kind of keep that in the back of your mind when you're paying SARS, is to always make sure that you check your reference numbers. Okay, what happens if you can't afford to pay SARS? You've maybe withdrew from your two pots and now you've got tax at more than you were bargaining on, or more than you kind of had in the back of your mind that you were going to be required to pay. You can actually request a payment arrangement with SARS. So you can request it on e-filing, and you'll explain your situation to SARS. They'll evaluate your situation and they'll help you establish a payment arrangement, which will allow you to pay your tax in 6 or 12 installments depending on your situation. And yes, interest is still charged, but at least it provides like a bit of a cushion. SARS can't come after you with legal actions. It's very, very strict payment arrangements. So if SARS tells you this is the amount you need to pay, this is the date by when, you need to make sure you stick to your payment arrangement and you keep all future taxes up to date. Once SARS kind of void your payment arrangement, it's finished. They won't give you another one. So use the payment arrangement, but stick to what SARS kind of put on the table for you, because it's almost a nice thing they do for us. So we need to stick to the terms that SARS give us. So reviews and audits. Once you file your tax return, SARS may request a review on your return. So a review is just SARS requesting some supporting documents so that they can verify figures on your income tax return. So a review is usually triggered by if you have large claims, especially in medical or travel or donations, if there's any discrepancies between third-party data. So maybe you picked up that your RP5 didn't pull through correctly and you've corrected it, then SARS will definitely review that. And then they do random compliance checks as well. So a review is no need to panic. Again, it doesn't mean you did anything wrong. It's just SARS making sure that everything is in order. It's part of their process. And then you'll have 21 business days to submit your documents. And this is, again, very, very important. SARS have implemented a new thing called estimated assessments. So if you don't submit your documents within 21 business days, SARS will go ahead and estimate your tax, and they issue you with an estimated assessment. And doing any type of dispute on an estimated assessment is almost impossible. So therefore, it's very important to make sure that you provide SARS with everything they need to verify your return as soon as possible. And then what happens during a review? So SARS just pause the process of your return and they just verify your figures against your documents. They either then accept the return, they adjust it, and they will give you an explanation if they've adjusted it, or they refer it to audit. So income taxes being referred to audit is not very common, but just take note that it is definitely possible. And then how can we be prepared for reviews and audit? It's again just to make sure that you keep your documents for 7 years. Digital format is definitely best. And then to ensure your e-filing profile is up to date and submit clear, accurate records if SARS asks for them. The quicker you submit the documents SARS asks for, the more detailed those documents are, the easier it is for them to get the answers they're looking for, and they can finalize your review and it's good to go. So it's best to just submit rather more than what SARS are asking for rather than less. Don't bombard them, but give them everything they need to finalize your review. Notice of assessment. So that is your RTA 34 document that SARS will issue you once you've submitted your tax return. So that document just shows exactly the figures you've submitted. So we want to review this document and just make sure, again, is the income correct that's reflecting on the RTA 34? Are all the deductions you submitted reflecting correctly? Does the refund amount or amount owed make sense? And is there anything that's unfamiliar, maybe like penalties or interest that you weren't aware of? And again, don't just assume SARS is right. Mistakes can happen, especially with pre-populated data. And then disputes or corrections. So you've submitted your tax return, you've made a mistake, and you've realized it. It's not the end of the world. You are able to request a correction, and SARS then allow you to submit a corrected return to fix those mistakes you've made. They will then ask you for some supporting documents, which you'll submit, and it will be good to go once SARS have verified your new return against the supporting documents. So making a mistake is definitely not the end of the world. And then let's say, for example, there's something on your return like out-of-pocket medical expenses and SARS have denied your deduction. What can you do? You are able to lodge a dispute with SARS, so you can tell them, here's my documents, this is why I want to claim, and you can, by means of a dispute, try to rectify that disallow that SARS did. Disputes are quite complex. They require quite a bit of negotiation with SARS. We always recommend just seeking help from a tax practitioner when you are working with objections. And then tax planning. So this is definitely one of my favorite parts of this whole webinar, is how can we prepare for tax seasons to come? How can we kind of save a bit of tax in upcoming tax seasons? So tax planning is the process of organizing your finances to make use of all available tax deductions, credits, and exemptions before the tax year ends. So making a donation to a public benefit organization today doesn't affect the tax you'll be submitting in a few weeks' time. It will only affect the tax that you're going to be submitting next year, the 2026 financial year, or tax year rather. So it's exemptions before the end of the tax season. And then it's not about avoiding tax, it's about paying what is due, but not more to SARS. And then many deductions and contributions must be made within the tax year to count for that specific financial year. So plan ahead. I think you'll recall when it nears the end of the tax year, you'll get a message from your financial advisor, and then he always wants to know, do you want to add a little bit more to your RA, or do you want to put some money in a tax-free investment? And that's kind of their way of encouraging some tax planning. And then how can we save tax? I think it's a question we all would love the answer to. So some of our best advice when it comes to saving tax is contributing to a retirement annuity fund. Again, because this takes pressure off of the government, because you're able to provide for yourself once you've retired. So up to 27.5% of your taxable income, limited to 350,000 Rand a year, is tax deductible. Even a small little contribution to a monthly RA has a big reduction on your tax. And then claiming out-of-pocket medical expenses. So it's so often that we're so used to paying expenses out of pocket for medical aid that we don't even give a second thought to it. But having like one of those see-through baggies with the clip in your car door and popping your slip in there once you come out of Dis-Chem or Clicks, and at the end of the financial year, taking that bag out of your car, sometimes you'll be surprised at the amount of slips that you've been able to accumulate that are actually tax deductible. So yeah, keeping all receipts and proof of payments of medical aid expenses and actually remembering to claim them. I think we're all guilty of maybe not always remembering to claim all the expenses that we've incurred. And then keeping your travel logbook, of course. So if you receive a travel allowance from SARS, keep a SARS-compliant logbook. You can claim actual business kilometers traveled and potentially reduce your taxable income. And then contributing to a tax-free savings account. So the contribution itself isn't tax deductible, but the growth on that investment is tax-free. So that's a very nice way for you to grow wealth without having to pay tax on it. So that's a very, very nice little tool that you can use to save tax as well. Not directly, but definitely indirectly. And then donations to registered charities or public beneficiary organizations. We refer to these as your Section 18A donations. So you can deduct up to 10% from your taxable income for donation that you've made to registered public beneficiary organizations, and ensure you get a Section 18A tax certificate. Without that certificate, you cannot claim the deduction on the donation. So that's very, very important. And then the home office deduction. If you work from home 50% or more of the time, you might be able to claim some expenses back under the home office deduction. So again, just keeping track of those slips, having something in your car or in your home where you can just pop your slips in and you don't lose track of them during the year. And then last but not least, on how to save tax, you can use capital gain exclusions strategically. So the first 40,000 Rand of any capital gain in a year is not tax deductible, rather excluded from tax, and actually planning your disposals on assets so that they maybe fall over 2 financial years or tax years rather, actually helps you to utilize that 40,000 Rand exclusion. So just strategically looking on any capital disposals. And then how can we help at FJM Accounting Services? So tax doesn't have to be stressful. A registered tax practitioner, we are here to help you have an accurate and stress-free tax season right from start to finish. We assist from filing the tax return right through to dispute if it would be necessary. So we help with personalized tax filing, document review and organization, SARS correspondence and disputes, tax planning advice, and then year-round support. Like Claire mentioned in the beginning of the webinar, we are really your tax cheerleaders. And then just a big mention on common SARS-related scams that we've been seeing going around a lot the last couple of weeks is just to be on the lookout for any scams. They come in the form of emails with attachments, phone calls. So just making sure that if you receive an email that it is from the official SARS email address, which is usually no-reply@SARS, to use only official channels when you communicate with SARS, and then just taking note that SARS will never ever ask for your login details or for an OTP via email or SMS, and they will never ask for your bank PIN or send attachments that are like zip or exe files. It will always be PDF files. And then if it's a PDF file, just kind of looking at it with magnifying glasses. If the letter is addressed dear taxpayer, it kind of wants to give way that it's a possible scam. SARS will address the letter to you on your name. SARS don't have FNB, ABSA, Standard Bank accounts. They have one public beneficiary account. So if you've got a letter with multiple accounts, just take note that that might also be a scam. And if you're unsure, always head to e-filing, have a look under correspondence, and see whether the letter is there as well. And then I've got some top tip tax teams from our team at FJM. So from our side, I think I've probably stressed this more than enough, but just being really early to prevent the bottleneck. From Clarissa, who's in the background here today, we've got submit review documents within 21 business days to prevent the dreaded estimated assessments. From Ashley, we've got use SARS auto assessments as your starting point, not as your final word. Amanda, gather all your necessary documents before the start of tax season and ensure that you have proof of your deductions. From Cindy, we've got a deduction on donations will be granted only if a Section 18A certificate is issued to the taxpayer. From Dominique, we've got ensure that you use the correct reference number when making payments. So Dominique is our accounts whiz at FJM, and she always asks their clients always pay with the correct reference number, whether you are paying SARS or whether you are paying your tax administrator, just ensuring to use the correct reference number. And then from Claire, we've got work with the registered tax practitioner for a seamless tax season. And that's all from me today. I hope everyone enjoyed this session. In the chat box, we're going to pop a quick little poll. If you'd be so kind to please respond to our little poll. And then we will also be taking any questions in the chat box. So please feel free to put in any questions in the chat box.
Thank you, Sumire. I also just want to highlight that the downloads and templates are available in the chat. So if you have not yet gotten those downloads, please make sure that you head over to the chat now. You'll see the annual declaration, tax guide, the SARS logbook, and then an Excel sheet with some of the templates for those supporting documents that Sumire was referring to. I am keeping my eye on the chat to see we did have a question earlier, but I think Clarissa has answered that. I don't see anything else. Clarissa, is there anything from your side?
From my side, one of my clients did ask why isn't SARS paying out his refund? So I don't know if you guys could please answer that question. Yes.
Sure, Sumire.
Yeah, so refunds being held back, like I previously mentioned, is most likely due to either being caught in a bottleneck or perhaps there's an outstanding review or that's still in progress or some supporting documents that's still needed. So to that client, I'd advise just heading over to e-filing, requesting the review status and just seeing from that what is the reason for the hold up and then maybe getting some clarity on if there's anything outstanding from the taxpayer side.
Awesome. Thank you very much. I don't see anything else. As we wrap up this evening, I really just want to remind everybody that tax season doesn't have to be overwhelming. It's really about being informed, prepared, and proactive. And so I want to thank you very much for joining us this evening and investing the time to empower yourself today. We're here to support you every step of the way. So please don't hesitate to reach out. You can contact us with any questions, maybe book a consult with one of the team, or revisit the session and the downloads if you need a bit of a refresher. But until then, file smart, claim what's yours, and I really hope you have a great tax season. Bye-bye.
Bye, everybody. Have a great evening.
Thank you so much.